Hello everyone, I have an interesting video for you. Is there anyone still long Peloton? Do you like the stock today? What were you thinking? A company that borrowing money at a cheap interest and showering cash on celebrities such as Beyoncé to promote their bikes with an iPad sticked on the top of it, which are very expensive for the regular Joe and Jane to buy, would make you money? Who make you believe that a company selling a bike for around $3,000 or $4,000 is a value company? This company from the get-go is not appealing to a wide audience, as biking at home is a niche activity, and nothing explains someone buying their stock at $160 at one time, except of him or she is a zombie who buy first and ask question later. Now the stock crashed to the $20 range, and a lot of zombie retailers are holding the bag for a long time. The one who bought at the top especially. Nothing from the IPO indicated that it is a growth company. To explain the high stock price, everything is done for Peloton now. There was clear signs of the top when insiders were dumping on the heads of the retailers and blowing their balance sheet with debt. All warning signs were there, and now the company crashed and the stock is in his way to zero, and will be delisted from the stock market. So if you are holding these bags in Peloton, don't be so sad. There is Kathy Wood holding a bigger bag on the same name as she bought near the top. Take a listen.
Peloton shares have plunged over the past 6 months. They're now about $30, and the market cap's $9 billion. At $170 a share, it's just amazing how things seem to make sense in a given period where you are, but they really didn't. Some executives, it seems like they knew this, or they had some very well-timed scheduled sales because they avoided the big drop. Robert Frank joins us now with more. I would say well-timed, but any time in the last year has been a pretty damn good time to sell, Robert. But anyway, take it away.
Yeah, you're right, Joe. It's not necessarily unique to Peloton, but Peloton shares falling another 3.5% yesterday, down over 80% from their peak last year. But as you mentioned, Peloton executives selling about $500 million worth of shares, all before that big drop. John Foley, the company's co-founder and CEO, sold $119 million worth of shares. That was between the end of 2020 and the fall of 2021. Most of those sales were for about $110 a share or higher. They now, as you mentioned, trade at around $30 a share. Peloton did not respond to requests for comment, but according to SEC filings, Foley started a pre-scheduled selling program in September of 2020 for, quote, personal financial management purposes. The plan called for selling 2.4 million shares through October of 2022. So far, he has sold just over 1 million shares, with his last sale finished last August. Other Peloton executives also cashing in close to those highs, all through selling programs. The chief legal and culture officer sold over 90 million in shares, the chief product officer over 60 million, and the COO 28 million.
Now you know who is cashing on the top and leaving the ship while they knew ahead of time that it will sink. And they didn't tell you. The question here, where is the SEC? The CEO of the company sold $100 million on the top, while the papa and mom retailers, they lost all their money betting on Peloton. This is one example of thousands that is happening in the stock market during the last few years. Should understand that there are sharks there. They are waiting for this kind of opportunity to make themselves richer and richer with the poor money. This is the biggest wealth transfer, but it's the wealth transfer from the poor to the rich to make them even more richer. With that being said, we have a market to cover. Let's start with the market performance for the last 24 hours. The Dow is down 313.26 points, or declined by 0.89%. The Nasdaq is down 186.23 points, or a decline of 1.30%. The S&P 500 is down 50.03 points, or a decline of 1.1%. As you see, the market gave up all his gains on the last hours of the tradings. This is crazy. Let's move to the one-day performance of sectors. We see it's a bloodbath except of utility stopped on the flat line, with laggers of the day were basic material, consumer, cyclical, and energy. Energy, crude oil West Texas Intermediate down, crude oil Brent down, the gasoline down, heating oil down, with gains for natural gas and ethanol. Natural gas is popping higher amid the geopolitical situation now, the conflict that is rising between Russia and Ukraine, which pushing the gas higher and higher. Soft, coca down, cotton down, coffee down, lumber down, sugar down, with gains for OJ. Materials, gold on the flat line, silver, platinum and copper down, palladium on the flat line. What's going on with the meat? We see gains for lean hogs, flat line are for live cattle and feeder cattle. Grains, soybean down, soybean meal down, soybean oil gaining 0.45%, corn, wheat, rice, oats, canola, everything is down. Let's move on to the heat map, and everything is red all over the board, with technology down, communication service down except of EA Entertainment for gaming, Amazon is down, consumer defensive, same thing, Walmart down, Costco down. For the healthcare, a lot of names down, Johnson & Johnson, Eli Lilly, Merck's down, AbbVie down, except of slight gains for Pfizer. On financial, MasterCard and Morgan Stanley are the ones that we can see that they are on the green line. Other than that, let's move to the chart analysis. We'll start with the SPY, with the daily time frame. We see the flash down on the SPY, and the head and shoulder pattern, like we said, is playing to the downside with a huge volume. We reach an oversold area on the RSI, but it's very early to tell that we have reached a tradable bottom on the SPY, as the next support is at 435. But for now, and with this kind of events and sentiment change in the market, all these supports are relative now. The only way we can tell that we have a bottom in the market is that when the next day the market will open gapping way down, like for example 1,000 point down in the Dow Jones, for example. At that time we will understand that we have a tradable bottom, and maybe we will get a rebound and an upward move. Other than that, these gap and crabs, they don't indicate that we have a tradable bottom and that we don't have a bottom yet in the market. So we should keep an eye on the macro events and the economic events, and try to find and feel the sentiment in the market and where the money is filing in. Basically, as we explained in the last few videos, that money is funneling in the inflationary name, such as Procter & Gamble, Union Pacific, and in value name with a strong balance sheet and a lot of free cash flow. Let's move on to the Qs, daily time frame. Same thing. The Qs bottom crossed the support of 369 decisively. As we said, we don't see, it doesn't matter if we will draw another support or we try to find some kind of technical support on the chart, as long as we don't have a bottom. The IWM, it seems like it want to crash. We stopped at the $200 mark, and a lot of high multiple name, a lot of zombie companies with a balance sheet blowed with debts. All this kind of company, they will push and drag the IWM down and down and down. And as it seems now, this bloodbath is no way to end in the near future. Let's take a look at Apple. Apple is very important stock. We're covering it on each hour video because a company that reached a 3 trillion market cap, it's included in every portfolio, in retirement portfolio, in hedge fund portfolios, in retail investor portfolio. Apple is present. So as we see, if Apple goes down, the market goes down. If Apple will run up, the market will run up with it. So as we see here, Apple has crossed the support of 167. The head and shoulders is playing to the downside. Let's take a look on a weekly time frame. Sometimes zooming out on chart makes sense. We see here at this level we had Apple reaching the 3 million market cap, and now it's crawling its way down. If we will draw a line that this weekly chart is respected, we will see that Apple will reach these levels, the $150 mark, $155 mark. As for now, I don't see that it's good to buy the stock at this point when everything is pushing to the downside. We see on the MACD that the line indicator are crossing, and the histogram is getting out from the green territory, and soon it will have red impression. We don't have to forget that we are on the weekly time frame, which is a zooming out to have a bigger picture, more downward to Apple stock. Tesla on the daily time frame, it one more time knocking on the gates of 995. And how many times did it knock? 1, 2, 3, 4, 5. And if this chart keep on knocking on the gates of 995, it will open the gates for a bigger flash downs and for a bigger move down for Tesla. So as we see, let's take a look at the VIX for our chart. Here you go, the VIX did spike as we were expecting in the last video to the 25 range. We see that the MACD lines are pointing forward, and the green impression in the histogram not getting smaller, they are getting bigger, especially the last bar, even though the RSI indicates that it's already reached a overbought territory. This indicating pain will persist in the SPY unless the VIX will cool down and will come back to the territory of the $16 mark. At that point we can say that we have a tradable area in the SPY, in the S&P 500. Let's take a look at the dollar, the Dixie. The Dixie is in bull flag, as we said, is playing cats and rats, catch me if you can, consolidating around this very two important level. In my opinion, this consolidation will broke to the upside. Gold after building the bull flag and breached the resistance of now support of 1834, is consolidating. and we will see how gold will react as we explain the decoupling between the relation of gold and the 10-year yield. Basically, they both build a bull flag on the same time we see here, and they are both now correlated for their retraction to the support line. So it's very important and it's very new indicators we have here for gold and the 10-year, this correlation that there is rational change in the market forward. AMC, it reached the oversold territory, but red impression and the downward pointing lines on the MACD are persisting. Anticipate that AMC will be trading below the $20 mark. Let's take a look at BTC. BTC, we see that after the fact that Bitcoin has breached the support of 42,000, things are going downwards, and Michael Saylor, the godfather of Bitcoin, he has announced that he will not sell his $5 billion microvision worth of Bitcoin, even if Bitcoin will crash. But I don't think that it's reasonable. Remember that in the .com with the same company, he dropped on the top over the head of the retailers with the .com scams, and now I see that maybe this kind of scheme is playing one more time. So be careful here with Bitcoin. That's all I have for you today. Thank you for watching, thank you for listening, and I will speak with you all soon. If you find what presented on this channel helpful, like and subscribe to improve the algorithm, and follow me on social media.